Live. I'm the SmallCapSteve. I've got my cup of Joe here. I'm ready to talk some small caps with the great Jay Lutz, founder and editor of The Deep Dive. There's some crypto deals they're really running today. That'll be fun to talk about. My Twitter feed seems to be filled with people who are concerned about whether TGOD has organic or certification or not. Maybe we'll talk about that. I want to get into Screaming Kitty or Roaring Kitty or whoever it is that had his congressional hearing last week. I've got a lot of thoughts to unpack on that. And we'll get into all the Canadian venture news. So buckle up. It's Monday, February 22nd on SmallCapSteve Live. Let's get started. Jason, sweet Jason, how
Good morning.
do you do?
It's a slow morning.
Yeah, there's not what's going on.
No, Monday. It's never Mondays that are busy. Truth be told, it's Tuesdays and Thursdays that I hate my life on. But
just not much.
Win some, lose some.
Not much news. Look,
a lot of Twitter drama.
What
that counts for?
Oh, with the control energy stuff. Do we want to get into that? I almost kind of want. I want to
like for having an opinion on something.
Like that's fine. Sue us. Fucking sue me. I don't care. I actually have a litigation lawyer I have a credit with. I'd like to use it. He's like, Steve, you didn't use up all your wire last time. Should I send it back? No, don't worry.
It's coming.
With my business partner Jay, we're gonna need you again. So the fireworks were that there were a couple of people. One was from fucking McGill University who looked at control energy and they had some skepticism. And then there was this whole what seemed like a bunch of fake accounts on Twitter that just started spazzing on these people who don't really know what the Canadian microcap world's all about. And it created a little bit of Sunday night drama. Our buddy Betting Bruiser got into it with them. We have no position in it. When I see a company double down on threatening to sue PhDs who question their technology, to me, if I were to pick a position, I would go short. But again, not really a position here. I've been fascinated by the whole thing.
I always find it interesting when a bunch of Twitter fake accounts try to discredit people with PhDs and McGill University, which is one of the best known universities in Canada. But, maybe I'm wrong. I don't know. And for the record here, let's also clarify that this whole article literally said we need more evidence. And apparently that's worth suing over. So to me, that says enough. It
sounded to me like somebody who runs a Twitter account that, could be high up in the company, had a couple too many glasses of wine last night and started tweeting out bullshit. But you want to sue them.
It's not going to end in your favor.
First off, your litigation lawyer is going to beg you not to do it because they'd rather work on things that they actually have a shot in, but they'll take your money because, they're happy to accept a retainer and work on stuff. You'll find a lawyer to take it on. But I read the articles. I didn't see anything that was sue-worthy.
I thought good questions were raised, personally. So I've been a skeptic from the start of this technology. I'll be clear on that, but that is what it is. Whatever. Yeah. It's not illegal to be skeptical.
Yeah.
Or a suable offense, I guess I should say. Not necessarily illegal, but
it's apparently legal to hire a bunch of promotional bodies that have platforms to talk about you positively, but it's not okay to be an objective third party who questions things, especially after the government hands over, a large grant.
Ontario gave $2 million and the NRC gave some further funds, which apparently is vindication of the entire body of research on this thing.
Because government people never make investments in stupid things.
They always invest where is best appropriate. There's plenty of evidence of that.
And look,
just ask S&C leveling.
Yeah. Look, hopefully for them, their technology works. It'd be great, but I'm a skeptic. Again, no position, but I think that the whole thing's a really bad look for the company. So here's what I want to get into here. This is it Roaring Kitty?
Yes.
Yeah. So Roaring Kitty had his congressional hearing last week, and I was chatting with my buddy Dan on Saturday night. He gave me a call around like 9 p.m. on a Saturday. I was sitting around watching Blue Jays YouTube clips and fell asleep, and I got a call, and my buddy Dan called me. And we started talking about this because I watched this the day before. I think this was on Friday. And, it really was thought-provoking for me of people who graduated school around my timeline, so millennials that are looking for jobs in finance, and how challenging it's been. And I just I want to play this, and then let's unpack it. So here we go.
Ranking Member McHenry, members of the committee. I'm happy to discuss with the committee my purchases of GameStop shares and my discussions of their fair value on social media. It is true that my investment in that company multiplied in value many times. For that, I feel enormously fortunate. I also believe the current price of the shares demonstrates that I've been right about the company. A few things I am not. I am not a cat. I am not an institutional investor, nor...
I got to stop him right there. He's not a cat. He's not an institutional investor. You could tell that he put some time into writing this. That's great. All right, let's keep going.
Am I a hedge fund? I do not have clients, and I do not provide personalized investment advice for fees or commissions. I'm just an individual whose investment in GameStop and posts on social media were based upon my own research and analysis. I grew up in Brockton, Massachusetts. My family was not wealthy. My father was a truck driver and my mom a registered nurse. I was one of 3 kids and the first in my family to earn a 4-year college degree when I graduated from Stonehill College in 2009. That was not a good time to be looking for a job. From 2010 to 2017, I worked at a few startup companies, but there were significant periods when I was unemployed. I took an interest in the stock market, and even though I had very little money, I used those times to educate myself and learn more about investing. In April 2019, after nearly 2 years unemployed, I accepted a marketing and financial education job at MassMutual. My wife Caroline and I were thrilled that I had an income and benefits. My job was to help develop financial education classes that advisors could present to prospective clients. I was not a stockbroker or a financial advisor. I did not talk to clients, and I did not recommend stocks for them to buy. Before and after I joined MassMutual, I studied and followed stocks. One of those was GameStop. In early June of 2019, the price of GameStop stock declined below what I thought was its fair value. I invested in GameStop in 2019 and 2020 because, as I studied the company, I became more and more confident in my analysis. 2 important factors, based entirely on publicly available information, gave me confidence that GameStop was undervalued. First, the market was underestimating the prospects of GameStop's legacy business and overestimating the likelihood of bankruptcy. I grew up playing video games and shopping at GameStop, and I plan to continue shopping there. GameStop stores still provide real value to consumers and reliable revenue for GameStop. Second, I believe that GameStop has the potential to reinvent itself as the ultimate destination for gamers within the rapidly growing $200 billion gaming industry. GameStop has a unique opportunity to pivot toward a technology-driven business. By embracing the digital economy, GameStop may be able to find new revenue streams that vastly exceed the value of its business. I am hardly the only person who has advocated these points. When I wrote and spoke about GameStop on social media with other individual investors, our conversations were no different from people in a bar or on a golf course or at home talking or arguing about a stock. Hedge funds and other Wall Street firms have teams of analysts working together to compile research and analyze shares of companies. Individual investors have those resources. Social media platforms like Reddit, YouTube, and Twitter are leveling the playing field. The idea that I use social media to promote GameStop stock to unwitting investors and influence the market is preposterous. My post did not cause the movement of billions of dollars into GameStop shares. It is tragic that some people lost money, and my heart goes out to them. But what happened in January just demonstrates again that investing in public securities is extremely risky. As I said earlier, I consider myself and my family fortunate with our investment. When the stock price broke $20 in December, I knew my investment was a success. I was so happy to visit my family in Brockton for the holidays. The money will go such a long way for us. We had an incredibly difficult 2020. Most difficult was the tragic and unexpected loss of my sister Sarah in June. I am grateful to be in a position to give back to and support my family. As for what happened in January, others will have to explain it. It's alarming how little we know about the inner workings of the market. And I am thankful that this committee is examining what happened. I also want to say that I support retail investors' right to invest in what they want, when they want. I support the right of individuals to send a message based on how they invest. As for me, I like the stock. I'm as bullish as I've ever been on a potential turnaround for GameStop, and I remain invested in the company. Thank you. Cheers, everyone.
Jay, what do you think of that?
It was obviously very well assembled and pre-written. That was certainly not off the cuff. I see what he's doing in terms of providing some personalization into it, identifying the loss of his sister and everything to get sympathy, as in he's just a retail guy. He's your typical employee, not necessarily blue collar, but effectively that's what he's framing it as. And I mean, I don't disagree with the notion that why can we not post on social media about stocks, right? Like, you can talk about it in a bar, just like you said. That's absolutely fair, correct, whatever you want to call it. How much he was involved in this whole thing, I'm skeptical he moved billions of dollars, right?
It's like Barry Bonds. I know you're not a baseball guy, but whatever. I'm going to go there. Everybody was doing steroids in the mid-'90s in baseball. Barry Bonds was the best player in baseball before steroids. Barry Bonds looked around and said, I'm better than fucking Mark McGwire and Sammy Sosa. Where's my credit? What did Bonds do? Started taking some steroids, started taking some HGH, human growth hormone. And not only did he become the best player in baseball, he put up a season that nobody even wants to acknowledge as the greatest season in the history of baseball by a fucking mile. Right? He had an on-base percentage of almost 700. Got to the point where there was a game where he was hurt and he couldn't swing a bat, and they just said, just go stand there. He walked 4 times. Got on base all 4 times. Did not swing the bat once. But the point that I'm getting at is he ended up taking these steroids and did it so fucking well that everyone said, okay, that's not fair. That's not good. So this is a question is, did this Keith Gill, Roaring Kitty, was he just too good? Did he just create too big of a movement? Is it okay to pump your book and promote your own long, so long as the stock only goes up a little bit, maybe gets a little bit of traction, but when it breaks the fucking internet, no. And so I don't see anything that this guy did wrong.
You know what I honestly think this is? Keith Gill has effectively become the scapegoat for the issue. If he's not lying about his position, I have no reason to believe he is. If he was actually acquiring between 2019, 2020, and everything, he has a long history of buying into it. And really, he's just become the scapegoat, even though his purchases would not have directly impacted the massive run in things, right? So to me, I go, okay, so it's clear that hedge funds made money on the long, just as so many lost on the short. And all it is they managed to pin it all on this guy while everyone else made off like bandits, no problem, and away they go on to the next one, right? Like, Keith is getting the blame for GameStop, and we know how smart Congress is with anything related to this. So let me guess, he's going to now get blamed for Nokia, for BlackBerry, for Sundial, for all of those names that ran on the same freaking premise. But he's just the guy that gets pinned with it.
My bet is that if these things keep happening, they just take away options from Robinhood. That's how I see this ending.
Not even Robinhood. I will bet that options go away for anyone that is not accredited, and they will confirm that you're accredited.
Yeah, the problem with that is that options are a big business, and like, if you talk to some sophisticated traders, they'll actually tell you options are for fools, and they're the ones who are writing the covered calls or the covered puts, and taking the money off retail. It's fine. Look, it's fine when retail's losing.
Oh yeah, it's like anything.
It's a problem when retail wins.
It's just like the government. When the government's winning, no one cares, but when the government's losing, suddenly it's a problem.
But so anyways, the whole reason I showed this video was it resonated with me because I got out of school in 2008, 2009 myself, couldn't really find a job in finance, and had to find this weird social media path. Like, we're doing a fucking Twitter show. I didn't want to be on video. I know you didn't want to be on video.
God, no. But
welcome to 2021, where if you want to have a job in finance and work the street, there's three paths. Okay, one, you're born into a family that has a history of in investment banking and you get a job through nepotism. Two, you go to like one of three programs in the country: Queen's Commerce, Richard Ivey, etc. Rotman. You finish in the top of your class, you get hired. Or the third one is you hustle your way there. And hustling in 2021 as a young person means using social media. So I kind of hear his story. It's like, this guy seems like a smart guy. He's written all three levels of the CFA. The best job he could get was making fucking educational materials for like a mutual fund, if I recall correctly.
Yeah, something like that. Where he wasn't even talking to clients. He's actually since lost his job from that.
Yeah, and here this guy is a smart guy. Seems like he's clearly a smart guy. Managed to convince social media to take on GameStop, and he wasn't able to find work. Like that is just, it's so typical of millennials in investment banking, and the thing that a lot of people don't talk about, that I've come to realize, and I think that I'm probably one of the only people who seems to think about this, is this idea of a stockbroker is like dead, right? Everybody used to have stockbrokers, so you'd have someone you'd call. Like, I actually talked to my broker on the phone. I didn't really even know what a broker was 5 years ago, if I'm being honest with you. I thought everybody had discount brokerage accounts. I didn't know. Like, I thought that private placements were for high net worth individuals and investment banks and funds.
Which is another issue in and of itself. So you're telling me that I can go open an account with Robinhood and play options, but it's too risky for me to place $5,000 into a private placement?
Exactly. But really what I'm getting at here is that used to be the path for young people to get on the street, right? They'd get a job as like an assistant broker in the mailroom, etc. That was their start. That was their ticket to getting involved. And that doesn't exist anymore, right? Like, it exists if, like, your dad happens to be one of the top brokers at Canaccord or Haywood. But for the rest of us, it doesn't really exist. And perhaps, you manage to go and finish top of your graduating class at like Rotman, and you get one of like 5 jobs as sort of a sell side analyst. But there's just not a lot of opportunity out there, and like you get a kid like this who's not a kid anymore, but this was his path. This was the way that he got to get involved in finance, because the only things that were available for him were shit jobs with startups or making educational materials.
For mutual funds.
And like he wrote all three. Like, you should see the CFA program in Toronto. When now, obviously, since COVID, it's a bit different, but it is insane, dude. There's like 20,000 people, I think, sit down to write the CFA in Toronto on like the first Saturday of June every year. 20,000. Think about that.
And how many finance jobs do you truly think there are across Canada? But genuine question.
Like, so depends on how we want to define finance. See, finance is largely turned into a bunch of sales representatives of big banks trying to sell these financial products that TD, BMO, Scotia creates as part of like their whole system, and no one's going to generate real wealth by like if you think you're going to sit down with a financial advisor at TD Bank and you're going to generate real wealth doing that.
No, you're just going to earn your 7%. What is it? The average is 7% per year for the last how many years? Because that's actually the real rate of inflation, effectively.
If you're able to do that, then good on you. But yeah, I actually feel for this guy because, like, you could just sort of tell when he tells his story, it sounds like he's had a pretty fucking depressing life. Like, and then finally something good happens for him, and he ends up in front of Congress. He finally had success.
I'm not sure that's a good thing or a bad thing at this point.
It's just, the big thing that I stress to young people is you got to find your own path. Being an entrepreneur in 2021 is about networking, picking up the phone, thinking outside the box, because like often we talk about disruptive technology, and in this case here, the disruptive technology was online discount brokerages, right? That's changed the system. That's changed the path for people to get jobs in finance. Those are all gone now. Like you're not gonna, like, a lot of the people who are running deals today of microcaps were former brokers at Canaccord that just like couldn't cut it, or Yorkton or Hampton or Haywood or Mackey, and they couldn't cut it. So, but you know what? They said, I'd rather go work on this mining deal, or I'd rather go work for this tech company. And then they ultimately became deal makers or operators, and that was their path. So, if you're young and you watch this and this sort of, pulls at your heartstrings a little bit, that's unfortunately, like, Keith Gill found his path. His path was, I'm going to educate myself as best I can. I'm going to get active on social media, make friends, and I'm going to post my trade ideas. And I don't like. He didn't do anything wrong, right? Like if I saw a clip of somebody on Kitco the other day, and they were saying, "Oh, this guy's going to jail for 10 years." What's he going to jail for?
For having a public discussion.
I don't think he did anything wrong, and I say to Keith, good on you, and
I hope he took some off the table. I truly hope he took some off the table.
This guy seems smart enough to know. He seems it's Roaring Kitty. Is that it?
Yeah, something like that.
This guy here seems like he's smart enough to like. I think he's smart enough to know, right? Like he was smart enough to write this thing called the gamma. Was it infinite gamma squeeze? He was smart enough to articulate that in an easy to understand fashion on Reddit. And I think I'm certain that he's smart enough to know that if GameStop is trading at $50 and he bought a bunch of stock at $5 to get the fuck out. But it sounded like he was playing call options. I don't quote me on this, but I heard somewhere they made $50 million.
I think that was unrealized. So I don't know how much he took off the table. Truly, I hope he did make $50 million, especially now that he's being put through the meat grinder right now. Absolutely, I hope he took some off, and it was that much. But it just comes down to they always need someone to blame, and they try and blame it on the guy that can't afford to defend himself.
Mm-hmm. let's move on here and take a look at some of the ongoings of Canadian small cap news. There's not much to talk about.
No, it's a slow morning. I see James Garner's saying that our long-running client has been on the move. I have not even looked at the markets this morning. I've been worried and catching up on work.
PBX at 73 cents. James Garner.
72.
72 cents. It's at, last I saw, 72 by 73. Traded 1.24 million shares.
Oh, here the high 75. That's great.
Good for you, Mr. Garner. Is Kelly Jennings on steroids? If you ever met Kelly, Kelly's actually a pretty big dude. Big dude. It wouldn't shock me if he was on steroids at some point. Certainly plays the role of an auto fintech CEO. So congratulations to PBX shareholders. What other names are running this morning? I saw CryptoStar. I chatted with the CEO, by the way.
Actually, you know what's running? Oh, Hut 8 at one point is up 30% this morning. It's now up 19%.
Did you see CryptoStar here? Let me pull this chart up for you. CryptoStar's up 55% today on 54 million shares traded.
That's wild. I'll be honest. I don't know what they do. They were supposed to do an interview with us a month ago.
They do. My understanding is that they do mining, but in the cloud.
Interesting.
Yeah. Well, this is 55 million shares traded in one day. It's not a tiny number.
No, not at all. Looks like Anon is dumping like crazy there, though. Holy man!
I can pull up the house positions for you.
Scroll to the bottom.
Morgan Stanley has bought 2 million shares. Anon has.
Oh. Anon's not even there. It's just a matter of timing.
Yeah.
Oh, jeez.
Anon's actually bought. You're wrong.
So here's what I always find interesting. Someone buys 2 million, but they're only net not even $1 million. Like, there's a lot of washing going on here.
Oh yeah. Well, this is welcome to small caps in Canada in 2021. There's certainly. I'm not going to name the investment bank that I think is going to follow up with a raise on this deal. I've seen this happen on a couple deals where like volume just comes out of nowhere and explodes, and then like after a week, it's like they announced this like bought deal for $20 million.
Speaking of bought deals, it is absolutely irresponsible, honestly, that GameStop did not raise a single dollar during all of that. I don't understand that in the slightest.
They didn't do like an ATM or anything?
No. Like, what? Like, talk about a lost opportunity. Look at Sundial. Sundial was smart about it. And, I mean, I know I give you shit about this one all the time. I don't even know where it's trading at today or how much it's traded or anything like that. But they raised a hell of a lot of money at the right time. To me, that they were responsible for shareholders. You still holding this?
Yeah.
Oh man, you're gonna round trip this thing, aren't you?
I'm round trip it. I'm gonna round trip it. We're just in the process of taking out $1 billion offering. What's the volume on Sundial today?
I think you gotta go TradingView for that.
What up on Yahoo Finance? Is this thing still trading 1 billion shares a day? It's only traded 162 million shares today.
Oh,
it looks like Sundial, like the volume's really drying up here. That $1 billion financing may be a little bit too much.
Is it financing or just a prospectus?
Oh, it's a shelf offering, so prospectus, I guess. Yeah, who knows what they're ultimately going to offer.
Be interesting to see what assets they bend in.
Yeah.
Fire and Flower this morning, actually, that's something somewhat notable.
They announced.
What's that?
Let's take a look at that one.
Yeah, let's take a look. So there wasn't a lot of details offered on this, but Fire and Flower is entering the U.S. market space despite being listed on the TSX. And
Isn't Fire and Flower on the NASDAQ?
No, they filed, I think, last week to uplist to the NASDAQ, but they aren't done there yet. But effectively how they're doing it is a licensing arrangement where they get to buy the assets at a discount upon a legalization event. So they've entered into agreement with, what was it? American Acres. So American Acres formed a Canadian subsidiary for which Fire and Flower invested into, and effectively they bought the licensing rights. So a bunch of stores are going to have their label changed to Fire and Flower across Nevada, California, and Arizona. However, that's pretty well all the details that the company gave us. We have no idea of the financial impact that this is going to have, which is weird to me because if it's as big as they say it is, they should tell us. On top of that, they don't even mention how many dispensaries American Acres has or anything. All we know is that the first store is to open in Palm Springs in the first half of 2021. But to me, that doesn't say anything. Like, there's no details provided on what you would think would be a major news release for this company.
Yeah. Okay. Well, let's wrap up the show here because there's not a lot going on in the news today, and we took care of some stuff. What's going on at the Dive this afternoon?
This afternoon, we've got some stuff on lithium coming out and some stuff on Bitcoin coming out from Jim McFadden that I did not get out over the weekend. He's already got some stuff lined up on Nevada copper for later this week, so it's just a matter of me playing catch up and getting done some editing.
Okay. So for you watching us today, nothing we talk about on here is financial advice. Nothing is a buy or sell recommendation. This is for educational or informational purposes only, entertainment purposes only. If you're looking for financial advice, please go see a licensed financial representative. Do not rely on us. We got some good guests coming up later on in the week. I don't have the list in front of me, but today we just thought we'd just do a light little show, talk about some of the ongoings, and we'll be back at it tomorrow at noon, as always. Thanks for joining us.